Are we seeing an EV market collapse in the US? Is the once promising dream of electric vehicles, EVs, in the United States turning into a nightmare? Selling these eco-friendly cars is facing unprecedented challenges, with a major secret at the heart of the chaos. Nearly 80% of the essential components, especially the batteries, are tightly controlled by China. As this revelation ripples through the automotive landscape, panic is setting in among car brands. In response to the looming crisis, car manufacturers are frantically slashing prices in a desperate attempt to revive interest in EVs. Bloomberg, a renowned business news group, reports a staggering 13% drop in the average price of EVs in 2023.
I think the slowdown is in the EV adoption. So essentially people are adopting EVs slower than expected. The meltdown is in corporate companies and investor expectations. Essentially, companies had planned massive investment on the premise of much faster adoption of EVs.
The reason behind this price plunge? The cost of batteries is decreasing, sparking hopes that more people will be enticed into the electric car revolution. But the real question is, are we witnessing the collapse of the US EV market? Is this price drop a lifeline, or merely a temporary fix? And here's the kicker, even if you're not an EV owner, this crash could still have repercussions for you. Think you've got the scoop on what's happening? Think again. So let's find out. Consumers are turning their backs on EVs, leaving thousands of these sleek electric machines gathering dust on dealer lots. The commitment from automakers to pour a staggering $616 billion into EVs by 2030 is now overshadowed by an unforeseen twist that has led to one of the most significant automotive crises in recent history. In a turn of events that caught everyone off guard, nearly 1 million EVs flooded the market this year alone, only to find a lack of eager buyers. Let me spill the details on this unexpected catastrophe. The entire EV market is teetering on the edge of a crash, with prices expected to plummet by a staggering 50%. If you were contemplating a new or used EV, now might not be the opportune moment to make that purchase. Giants in the automotive industry, such as Ford, GM, and Tesla, have invested billions in the EV game. But the unfortunate reality is that nobody seems to be biting. In the United States, selling electric vehicles, EVs, has become a bit sluggish lately. It's taking almost double the time to sell an EV compared to last November. Although many people still see EVs as the future, replacing regular cars, doubts linger. The high prices, especially for basic models, and their limited range contribute to this uncertainty. Some blame it on range anxiety and the scarcity of public charging spots, making long-distance travel a bit tricky. But here's the twist. There's more to the story that isn't getting much attention. China seems to be secretly steering the American EV ship with a strategy that's not widely discussed. I'll delve into that in a moment. The numbers in the market tell a similar tale. Electric cars are spending a lot more time on dealership lots, around 90 to 100 days. This is in sharp contrast to regular cars, which usually take only 52 days to find a buyer. In 2021, a whopping 86% of Americans were thinking about getting an EV. Fast forward to 2023, and that number has dropped to 67%. One significant hurdle is the cost of EVs. They tend to be pricier than their gasoline counterparts. This might be why the luxury EV market isn't slowing down as much. So, despite the enthusiasm for EVs, it seems like there are some roadblocks on the way to widespread adoption in the US. The impact of rising prices is felt less among the affluent consumer base. Even Tesla, a pioneer in the electric vehicle, EV market, and the only profitable US carmaker in this sector, has not escaped the current economic downturn. In efforts to maintain sales volume, Tesla has made significant price cuts this year, some as steep as 30%. Recently, Tesla CEO Elon Musk expressed concern about the high interest rate environment, citing it as a reason for slowing down plans for a new factory in Mexico. Musk emphasized the importance of monthly payments in car purchases, stating that if interest rates remain high or increase further, it becomes much harder for people to afford buying a car. Despite challenges, various companies have collectively committed around $100 billion in North America to produce electric cars for both luxury and mass-market consumers. However, economic conditions are putting pressure on the affordability of these vehicles, making it increasingly challenging to meet production targets. For example, Ford's F-150 Lightning, an electric version of their popular truck, starts at around $50,000. This is a significant increase compared to its gasoline-powered counterpart, which is priced at less than $37,000. The primary factor contributing to the higher cost of electric vehicles, EVs, is the expensive batteries powering them. Research from Bloomberg MF suggests that it might take at least 3 more years before the prices of EV batteries align with those of internal combustion engines.
If you want to bring prices down for complex products like vehicles, you need to have decent mass production, and you have to be able to order from your suppliers also on a large scale in order to bring the prices down. So it's all about volume, volume, volume.
Tesla, in response to market challenges, has aggressively cut prices, resulting in a significant drop in automotive revenue growth. From 51% last year, it dwindled to just 5% in the third quarter of this year. The company's automotive gross margin also declined, hitting 16.3%, the lowest in over 4 years. Major automakers, facing this challenging economic environment, are adjusting their expansion plans. Elon Musk hinted at delaying Tesla's new $1 billion plant in Mexico. General Motors postponed the expansion of its electric pickup truck production in suburban Detroit, pushing the start date to late 2025 from the originally planned next year. Ford Motor Company is also scaling back, deferring $12 billion of its initially planned $15 billion investments in electric vehicles. Ford's electric vehicle unit, Model E, faced a significant operating loss of $1.3 billion in the last quarter, and the projection for the year anticipates a substantial $4.5 billion loss on electric vehicles, EVs. Currently, they are selling EVs at a loss of nearly $36,000 per vehicle. This financial challenge is evident in the sales performance of Ford's Mustang Mach-E, which experienced a 53% drop month-over-month in October 2023. Despite previously boosting Ford's sales records, production of the Mach-E is being scaled back, responding to the decreased demand as sales dipped from 5,872 units in September to 2,732 units. While Ford's overall EV sales increased by 12.6% through October, surpassing the growth of internal combustion engine, ICE vehicles at 6.8%, they fell short compared to the 18.8% growth in hybrid vehicle sales. In an effort to adapt to the changing market dynamics, Ford introduced a new flash trim for the 2024 F-150 Lightning, offering a 320-mile range and a technology-loaded interior for under $70,000. However, the high sticker price remains a significant obstacle for Ford, contributing to their challenges. In a surprising move, Ford's decision to halt F-150 Lightning production has reverberated across the industry, especially considering the recent retooling of their plant in Kentucky to boost output. The plant had been successful in increasing production until this recent decision. In a remarkable third quarter, electric vehicles, EVs, constituted more than 70% of Ford's total EV sales. However, alongside a production cut, Ford is also deferring significant investments related to EVs. The planned second battery plant in Kentucky, a collaboration with SK, is being delayed, contributing to an overall postponement of approximately $12 billion in EV spending. General Motors, GM, is encountering similar obstacles, announcing delays in the production of Equinox, Silverado RST, and GMC Sierra Denali EVs. The Orion assembly plant near Detroit will now initiate the production of Chevy Silverado and GMC Sierra electric vehicles by the end of 2025, a year later than initially anticipated. GM explained the delay by citing the necessity to manage capital spending and align with the evolving demands for EVs. Concerns about the future of the EV market are not unique to Ford and GM. Executives at Mercedes-Benz have also voiced apprehensions. In recent statements, top executives from all three companies underscored the challenges confronting the EV sector. During Ford's third quarter earnings call, CEO Jim Farley highlighted the difficulties in the EV market, stating, "It's been a challenging situation for sure. People are not ready to pay what we thought they would." Farley emphasized the stark reality that having a great product is no longer sufficient, and competitive costs have become critical. Addressing the concern of affordability for consumers in the electric vehicle (EV) market, Ford CEO Jim Farley pointed out that in September 2023, the average price for a vehicle in the US was around $48,000, while an EV would typically cost buyers between $53,000 and $60,000. Now, here's the eye-opening reason why American automakers face challenges in selling EVs. Almost 80% of the EV battery supply is controlled by China. As the US strives for self-sustainability in EV battery production, China's dominance in this area poses a significant hurdle. China's actions, such as causing the global semiconductor shortage in 2021, led to a rush in EV investments by car manufacturers hoping to secure Chinese EV supplies. However, when these cars finally hit the market, reality set in, leading to a slowdown in sales. Brands have responded by slashing prices, with Bloomberg NEF reporting a 13% drop in the average price of a battery electric vehicle in 2023, down to approximately $33,300. This price decrease is attributed to the lowering cost of batteries, anticipated to reach a tipping point for widespread EV adoption by 2023. What are your thoughts on the challenges faced by American automakers in selling electric vehicles, especially considering China's significant control over the EV battery supply? Do you believe the recent price drops will be enough to rekindle interest in electric vehicles, or do you foresee other changes in the future of electric transportation?